the financial market. This weird thing that some people are talking about that actually we don't understand, we don't know what it is. But some people seem to make money out of it, but maybe you think that that's just too dangerous. You don't want to gamble your money and so on. And to be fair, yes, for someone that doesn't understand the financial market, that can be scary. So what I want to do today is a concept that I want to launch, which is the Sunday market review. Let's get to it. So yes, today we are launching a new concept, which is the market review. And what I would like to do is, this is not very going to be an explanation on how to invest and so on, because that I'm going to do special video on investment, so on, the different classes. But here it's going to be more practical. We are going to go through the different asset classes, review, and I think I'm going to try to do it every Sunday night, Sunday evening, where we are looking back at what happened during this weekend, and then what we can expect moving forward for next week. It's also something, because I'm doing it anyway for myself. I'm looking at the chart and so on, what I can expect, and maybe that can be insightful for you to better understand how the financial market work, or what are the different asset classes and where the money is moving. So that alone, I think if you don't know anything about the financial market, it's going to be tough. I'm going to try to explain it very simply, and that's why I'm going also to do some video about investment and so on, about the financial market, so you better understand in general terms what it is. But yeah, this moment is going to be just looking at chart, looking at where things are going and what we can expect moving forward. So yes, and all that I'm saying, even though I put a disclaimer, this is not really financial advice. Let's be clear, it's just to give you an understanding of what is. Then of course each of your circumstances are particular. You shouldn't take risks that you are not comfortable with, and so on. You should look for a professional that can help you in your decision of investment, a real professional. I'm just a guy on the internet. But when you're going to see that guy, he's going to talk to you about the stock market, about bonds, about commodities, about this new thing that some people are talking about, that is cryptocurrency. You know about it, maybe. And so you're going to freak out. What? I don't understand. It's like a doctor that you come to see him and he starts saying, oh, you maybe have these symptoms, these symptoms, these symptoms, these symptoms, these symptoms, and you say, yeah. And he asks you, what you want to do? I don't know. I didn't understand a single word that you told me. And this is exactly that is going to be if you are going to see a professional financial advisor. And so my hope is through this series of videos about the financial market, and also the videos I'm going to do about the financial market, investment, and so on, will bring you this basic knowledge to understand what those guys, those professionals that you are going to go and discuss with, are going to tell. And so you can have a discussion with them to understand what they are trying what they are seeking to put your money in. And so, because they will tell you some stuff, oh, we have some bonds and some stock and so on, and so what you want to put your money in, and you will have no clue of what it means. So I will try to get that clear, at least, and also to have you understand the current economic, the current state of the market, so you can take educated decision with your financial advisor about the risk you can take. But what I'm saying is just information only. So let's get to it. First of all, This is what we call the, and I'm focusing primarily on the United States, because the United States, even though the China and so on start having more power over the economic of the world, the main power and the main dynamic are primarily on the United States. And so what the United States is going to impact the rest of the world primarily. And so this is very interesting to take a look first at, if we want to understand the financial market, we need to understand that this is money, and there is different asset classes. So we have the stocks, we have the bonds, we have the commodities, and now we have cryptos, and there is a bunch of other and derivative and so on. But those that I'm saying are different asset classes. This is just that. And in each you can invest in a bunch of stuff in each of those classes. But each of those classes, this is just money that is sitting here. And so what you are seeing here is the quantity of money in circulation in US dollar primarily. Yes, this is a US dollar. And so we need to understand, okay, so basic economics says that the more quantity of money in circulation, the less purchasing power you have for each dollar that you own. And that's normal. If there is 10 times more dollar in circulation, your $1 is just the value of your dollar is less. And so what we can see, so this is a yearly chart, because this is really important for you to also have access to quality chart and not just the shitty chart that your banks can give you that just show only 1 day, because this is also that the financial professional want people in general to focus just on a day-to-day basis, and this is extremely wrong. You need to step back and look at the big picture, what is going on a broader scale. The day-to-day doesn't matter. So what we see is the money is the quantity of money in circulation is increasing over time, and this is what creates inflation. Simply, you have more money in circulation, so the price, because you need more, $1 buy less, the price increase. This is the simple as simple as that. This is supply and demand, the mechanics. And so it has been studied, even though it accelerated since 2008, where the central bank started to print a little bit more money to sustain the stock market. But then we can see in 2020 a big, massive increase. And so if we take a look at how much, just in 2020, the quantity of money that has been introduced in circulation, we see that it's about 26%. So last year, the money introduced in the economy has been rise about 26%, and so we could expect about 26% of inflation, not necessarily in 1 year, but in the near future. And so we are already started to see it this year. I think you are aware of that. So the massive inflation that we are hearing is primarily about this massive increase in quantity of money in circulation, but also about all the difficulty to produce. But that's another subject. So, okay, we understand the money, and so now we need to understand where this money goes in terms of the different asset classes that I told you. But before we do that, let's move on to the monthly chart. So let's zoom in so you understand, because if you never had a chart before, each of these are what we call the candlesticks, which the beginning, if the candle is red, this is a movement. During this month, the price went down. So the open at the beginning of the month is going to be on top, and the close is at the end of the month at the bottom. And the wick that you can see, the little yes, wicks, basically. Here is the minimum and the maximum price level reached during this period. And so what we can see when we zoom out, this is the US dollar, the strength in the economy of the US dollar. And this is where things are tricky, because even though we had this massive increase in money supply, we can see that the US dollar during 2008 and until now has increased, and the last few years it has maintained its strength, let's say that. So the inflation, the loss of purchasing power, hasn't been already priced in currently. We had, so the central bank has printed a tremendous amount of money, but this hasn't been already priced in the chart. So what we could expect with just those two things that I showed you is, regardless of the asset classes, the US dollar is going to has a very high chance of experiencing a high level of inflation, and so we may experience high level of price rise. But and you may ask, why is that? Why did the US dollar maintain its purchasing power, and where did this money that has been printing goes? There is two answers to that. The first one is the money primarily went to the financial market. It hasn't been transferred to the goods and services and so on. So that's why the inflation is still contained. Even though people are freaking out about it, it's actually still contained. And the other aspect is the USA is very expert at exporting US dollar. And so any US dollar that is outside of the country is not priced in that chart, in the US economy. But the issue is if this starts to throw back, and the fact that the USA is able to export money outside of their country is primarily because the US dollar for a very long time was held as a world reserve currency. I hope it's not too technical and it's clear because a lot of stuff for me are very obvious because I spend a lot of time about it, but maybe it's not obvious for you. So don't hesitate to leave in the comments if there is things that are not clear and so on that I can help in the future. And so yeah, so people trust the US dollar, so they're taking it as debt and so on. So the US dollar, even though the central bank print massive amount of it, the part of it is just getting out of the country. But the issue is if those countries start not trusting the US government, the US dollar anymore. And then what could happen is the US dollar can come back to the USA. And if this happens, this will create massive inflation. So anyway, that's the macro picture. But what we see, okay, the US trend is still high, and it's very easy to expect some movement down of the US dollar. As you can see, we are still very here. This is the current months. And so we are still very high. We are at 93. This is an index, so this is not a price. Maybe a price. I don't know. So yeah, at the very bottom in 2008, the US dollar went down to the 70 level. So we are still very high, to the lowest level we have ever seen. So yeah, there is still some downside to the US dollar. And if this happens, which lead me to the next asset. The other asset, just because of that, will have a very high likelihood of rising in price. So one would say that currently this is almost a risk-free strategy to just invest, because if you don't, your money is just going to lose money, to lose purchasing power due to inflation. And if you invest, the likelihood that things are still going to go up is very high. So this is just the macro picture, because then we need to understand the relation between each asset classes, where there is too much money, where there is not enough money, and so on. So let's take a look for that. Let's go over the stock market first. So what we can see, and this is from 2008, and currently we are here at 4,500, and we were back then at 682. Yes, so it's been a tremendous more than 10 years now, almost 14 years maybe. So that's why personally I think we are closer to a big correction in the stock market than we are of a new very big bull run. And I'm not saying that we are going to experience very big crash and so on, but for now I try to stay out of the stock market, and you will see why I'm willing to sit on that kind of massive gain, because here we have, since the coronavirus, about 80% gain, which is completely insane, given the state of the economy. Having 80% gain since the coronavirus is just insane. But we are in a bull market, and we can see, if we take a look at the very, very long term, and just a second. So we had a long-term correction here during 1960 and 1980, where the financial market went sideways for a while. Then we went on to a very massive bull run of about from 80 to 2000. So it was 20 years in a row of big massive bull market. So maybe this is something that is going to happen. Maybe we are in a new very big bull trend that is going to last until the end of this decade, probably, so 2028 to 2030 maybe. But even then, you can see there was some big correction. Correction are normal. We should not be afraid of that. And a very good way to actually invest in terms of timing is wait for those pullback, for those correction where the price is dropping massively, and buy at that time. This is the smart move that every smart investor do. When the price fall and everybody is scared and selling, the smart investor are buying. This is how it goes. So yeah, and I'm just not confident, because we are already 2008 to almost 2022, so it's 14 years. Let's say we have still 6 years to go, but we may experience some massive correction on the way through. I don't know. I think we are closer to the end than we are from the beginning, and that's why there is other way you can put your money that are also speculative, because the bond market is let's explain. The bond market is simply debt with interest rate, and you know that interest rates are very low, but bonds are generally thinking as a way to invest your money safely without risk. And the interest rate you are going to receive by investing in those bonds, so you buy debt. This is simply that you buy debt from the government, from companies, and they pay you an interest rate based on what you buy. So this is relatively safe. If you buy bonds from companies, you still need to make sure this company is not going bankrupt. But if you take bonds of very known company like Microsoft, Apple, Amazon, and so on, those very big massive company, there is a very low risk for them to not being able to pay their debt. But this is very, as I said, currently the interest rates are so low that this is just this even not catch the inflation. Even by investing in bonds, you will still lose money due to inflation. So we need to look for assets that are a little bit more, let's say, riskier compared to bonds. But as I said, if you understand how financial market work and so on, and the risk is just a correlation of the amount of knowledge you have about the financial market, and I'm trying to explain to you how it works. This is less of a risk. This is less of a risk. So when I see a chart like that, I don't want to get in. For me, the period where it was interesting to get in was here. Here, basically. Here, when the financial market crashed in 2008, and then it came back up a little bit and so on. During 2008 and 2012, I would say that was very interesting to get in. And then continue to buy during each dip along the way to add to your position, but your main position should have been at the beginning. And so here, if you have never invested in the stock market, entering now is extremely risky. And as I said, maybe by not doing that, I'm just sitting on a massive run that is going to make some big money. But what we need to understand, seeking like that is more, you're seeking like it's a scarce resources. Making big gains is a scarce resources, and this is not true. There is opportunity everywhere, because even though what I show you, the S&P 500 is the top 500 company of the United States. There is a lot of companies that actually are not that up in their cycle of going up, and that are less risky to enter. But I think the stock market is just something that I don't want to deal with currently. I want to wait for a massive crash, then I will consider transferring my money there. So let's talk about what I do, which is primarily about the other asset classes, which is about commodities. And so commodities is gold, silver, platinum, copper, and so on. But the primary that I'm focusing on is gold and silver. What you need to understand is gold is the safer of the two. Silver is way more volatile, but also you can make way more gains. And so what I like about this chart is here we had a massive run, and at this point in 2010 I didn't want to have anything to do with it. And also during this point the stock market was just as crashed, and so the stock market was way more interesting back then than it is investing in gold. But what happened after is we had a massive correction here, and so it led to people don't really are interested in gold anymore, and so on. And so I really like seeing this chart, and this is still on monthly, so each bar is 1 month. So here it's accumulation. In the financial market, you need to understand that there is big player with tremendous amount of money, and those big players need a lot of time in order to position themselves to make gains. And so here, this is how the big players are positioning themselves. During this correction, you can see we have a cup formation like that, which means there are big players that are accumulating this asset. And so compared to the stock market, we can see that we are only at the beginning. We are only, let's say, so the range. So when the price is moving sideways like that, we are calling that a range. And so since the price got out of this range and have started its bull market, we are only 26 months in. So compared to the stock market that is already 12 or 14 years in its bull market, I think, in my perspective, it's much more safer to invest in gold, because gold had just started its bull market. We are still far from having reached the point where it's become risky to be in gold. And so that's why what I personally do is I try to invest the money that I have in the safe part of my portfolio, because investing is also that I didn't tell you, but it's also about having a portfolio where you have invested in different asset classes. And so currently my portfolio, it's almost inexistent in the stock market. It's a lot of money in gold and silver. And then I'm going to talk about the riskier part of my portfolio, which is crypto. I have a bit of crypto. But as I say, because this is a very risky asset classes, crypto is very new, it's very volatile, extremely volatile actually. But the gain that you can have are also very important. So that's why I'm not good. So you have the stock market, you have the commodities, you have the bonds, and you have the crypto. We are going to talk about crypto, but as I said, currently the bonds are not interesting. The interest rate are just under the floor, and even the central bank try to apply modern monetary policy, which is about having negative interest rate. So you are lending people money and you are paying them to keep your money. It doesn't make any sense. So yeah, so the bond market is fucked up. The stock market is just through the roof. And I think we have reached the point where it becomes more riskier to invest in the stock market compared to the gain you can have. And so for me, currently, the only asset that I like is gold and silver. And silver also, what you need to understand about silver, it follows gold, and with a little bit of delay. So silver has even just got started on this bull market. It's really barely got started. So silver has still, because when we are looking at gold, we have an all-time high that has been reached. Yes, in July 2020, August 2020, sorry. But when we are seeing silver, we are still far from having reached an all-time high. Yes, and I just think about that. Yes, really, you need to get access to quality chart. And if you want to copy what I do, just go to tradingview.com. You have a lot of quality chart. And then you need the tickers, and so if you want me to tell you what the different tickers that I use are, just tell me, I will tell you. But if you want to just watch in the video, this is just here, or when I do that, you can see what I'm typing here, and this is what you need to type in order to get the chart. And then you select here the time frame. So for now, I just show you the 12 month and the 1 month. And this is really important that you get out of this herd mentality of looking at just every single day and start looking at each week, month, and years. So you get the overall picture of what is going on. So yes, sorry, that was just a little tuto about trading. So yeah, you can see here the all-time high of silver, it's about 50. So you need to understand the volatility of silver is way higher than gold. But the gain also can be very interesting, because here we are currently at 23. So just to catch up to gold and get the all-time high on silver, we need to double. So 100% move. So I think there is a clear opportunity here to buy. I'm waiting because I think maybe the price can drop, or we are very close to have a good opportunity to buy in gold. That's not financial advice, again, that's just educational purposes only. I'll tell you what I'm doing. And so let's get a little bit closer in the weekly chart to better see what's going on. So in the US dollar, let's come back. We can see, okay, we have a current trend that is going to move up. I'm not going to go to explain. This can put a pressure down on the price. If the price of the US dollar, the strength of the US dollar starts going a little bit up, this is short term. I think over the long term it can go down, but over the next few months maybe it can go a little bit up, and so it can push the price lower. And that's why on the stock market maybe I think we can have a decent correction, not massive, probably 5 to 10% correction, but yeah, anyway. And so here, that's why also I'm waiting to see what is going to happen on gold, because if the price, the US dollar strength starts rising, it can push a little bit of pressure on gold and silver, which can either make a very good opportunity to enter, or what I don't know, if maybe the opportunity was here and now we have this bottom here currently, and we have ended the correction. So we had this massive uptrend that I showed you earlier, that I started. We have started the bull market, but then we had a little correction for the last year, and I think now we are entering in a moment where it's become a very good interesting opportunity to enter in gold actually. And let's see silver on the weekly chart. And so silver, as you can see, I'm waiting a little bit because silver look a little bit ugly for now. I want to see it maybe break a little bit lower, but I think we are very close to a bottom. Simply, let's remove the drawing. Yes, so as I said earlier, when we have those corrections, this is when smart people are buying. And so currently I think they are buying, and this is ugly. What you need to understand is the uglier the chart is, the more you think, oh no, this is going down, this will never come up anymore. This is when it's interesting to buy. This requires a massive amount of balls. But yeah, but see, this is very important. You shouldn't jump the gun. You need to wait, and this is what I'm doing. For now, I see that the price is moving down massively, so I'm waiting. I'm waiting for it to have any kind of reversal, or to sign a show of strength in the opposite direction before I'm moving it. Because maybe it's going to go down a little bit further, so I don't know. This is what I'm going to look for this week. See if the stock market, if silver is going to go down further, or if I can enter. We'll see. So yeah, not Bitcoin. Let's see Bitcoin a little bit later. So yeah, and as I said, this is now on the daily chart, and this is primarily what I'm going to be focusing on the weekly chart. This is the first time. This is the launch of the Sunday review. So in the future, I'm going probably to focus only on the weekly and daily chart, and maybe 6 hours into intraday to make my review. But now I'm just giving you an overview. I think I already give you just too much information. Let's see, is there people in the chat? No one still. Maybe someday I will have someone. Anyway, yeah, so there's nothing to say. I'm waiting to see. Actually, I enter here. I make $160 just on this move, and now I'm waiting. I've left because I'm not confident that maybe this is going to go down a little bit again. So what I'm looking for is either this is the bottom, and now the bull market is going to resume and continue, or it's going to go a little bit deeper. I'm waiting either to have a confirmation or yes about this top that we had, or this level right here. We'll see this week how it goes. And same for silver, as you can see, it's ugly. So I'm waiting. I enter here and I exit here for a loss of about $40, and yeah, so I'm waiting. Probably if we start having some strength in the opposite direction, I will get in, but we'll see. I don't know. So we saw the different asset classes, and there is one left which is the most riskier asset class. And as I said, risk is about the amount of knowledge that you have. So I've learned a lot of things. So for me, I don't consider the crypto market that risky because I truly believe in the future. But the risk is also a function of the volatility, and crypto is massively volatile. And because for me it's not that risky because I don't think about volatility as a risk parameter, because I know if a certain period of time that I have in my mind the price is going to go up, what happens in the short term. If, for instance, let's be honest, when I invested, so let's go to BTC USD. When I started invested in Bitcoin, in the crypto market, let's look at the weekly chart. The weekly chart is better. I had some, sorry, yes, we need to see things in logarithmic because the movement are so big that linear chart is not doesn't show really interesting stuff. So yeah, to be honest, I have invested just before the capitulation, a big tranche of the money I wanted to invest. Then I invest another part at the bottom, but I was ready. I experienced almost 60%, I think, something like that, of decrease in my investment. No, 50% of decrease in my investment right off the gut. So because I trusted that I know this is something that is big and is going to increase massively value, I was okay with that. I was okay. I didn't sell when the things were crashing. Actually, I buy more. And so far so good. Things has been great. But yeah, the volatility on this market is extremely massive. And depending on how much you're comfortable with this volatility, you need to adjust the amount that you are putting in your portfolio. I would say if you're very risk adverse, put only 5%, well, yes, maybe 2 to 5% of your money in crypto. I think this is a big opportunity that we shouldn't overlook. But also this, let's talk general funds again, just not with the current situation. So 2 to 5% if you are very risk averse. If you are comfortable, not comfortable, but balanced on this kind of risk, maybe 10%, you can go as far as 10%. And if you don't care about risk and you just want to make as much money as possible, maybe go as far as 20, but not much at that, because this is still very, very volatile. So you need to accept that you may lose everything. Personally, I don't think that's very a thing. If you invest in Bitcoin, because I think Bitcoin going to be there for a very long time. And in crypto, there is a lot of crypto. And so if you're not investing in Bitcoin, you are taking a risk of seeing your investment go down to zero because you choose the wrong coin, the wrong crypto. So there is a few cryptos that I truly believe in, and I think they are going to be there for a very long time, and they are primarily the top 3 of the current market cap, which is Bitcoin, Ethereum, Cardano. I think those 3 are not going anywhere. They are not, I wouldn't say safe investment, but at least they are not going to zero. I'm pretty sure about that. So yes, but, and this is a big but, even though what I say is correct, we need to talk about, as I said, are we in the beginning or in the end of a bull market? And this is where things get tough. Because currently, this area was the area interesting to invest in crypto during August 2018 when I invested, and October 2020. This was the period where it was interesting to invest, because we are trading sideways, and so the gain were more forward than back than on the past. Where currently we already have some tremendous gain. I don't think the bull market is over, but what you need to understand, what I mean by it was safer to invest here is, I don't think we will ever reach those prices ever again. This is what I mean by that. So if you just bought at this point and you just forget about Bitcoin for 20 years, you don't think about it ever again, your investment will do pretty well. You will never be in the losses and so on. But the issue is currently here, even though I think maybe we can reach new high, maybe reach 100,000 or very optimistically 200,000, what I think is the next bear market is going to bring us back to those levels. And so currently, you won't, but not that far. I don't think we are going to go below 30k at the next bull market. But so if you enter now, if you never have invested in Bitcoin, you need to accept the risk that the price might drop lower. I don't see it drop lower than 20,000. So it's still a limited amount of risk, but this is way bigger risk than earlier. So yeah, in terms of timing, now it's become very late. I think we still have 6 months of bull market and of short-term bull market, because here what I'm showing you is the Bitcoin tend to have a 3-year bull market with 1 year of bear market. But the overall trend since 2008 when Bitcoin reached is still up. I mean, in the next 10 years, Bitcoin is going to continue to move up. Probably at some point it will reach $1 million, but it probably is going to be at the end of this decade, or maybe at the next decade in 2030, 35, maybe 2035, we could have a Bitcoin at 1 million. So the overall trend over the long term is up, but this is very. I'm an investor. I want to make as much money as I can. So what I want to do is ride the bull trend as long as I possibly can and exit during the bear market, so I can buy back lower. But yes, so that's my take on that. So yeah, so it was more of an explanation. Probably it's not very interesting for those of you that are actually good in investment and so on, but because this is the first time I'm doing this market review, I wanted to explain generally what it means and so on, and what we can expect moving forward. So yeah, so let's do this market review like I would do the next session. So let's do it. It's tell me in the description how it goes so far. Did you understand? Isn't just too much? I don't know. Leave your thoughts in the description. Like the video if you like it so far. I don't know what I'm doing today. Honestly, I'm just going right off my head and I'm just speaking alone. My apartment. This is weird. Talking about finance and so on. What a nerd. Anyway. So let's start with the S&P 500. Let's see, because maybe you are investing in the stock market and you want my take on that. So let's see. The issue here is currently what we experience is what it call in trading a trend. So we have a clear uptrend, of course, with decreased volatility, and those trends tend to last very long. That's why but now it lasted very, very long. The volatility has decreased tremendously, and so I currently expect a 5 to 10% correction. I don't know about the long-term trend. Truly, given the economy, I would say the market should have crashed massively already 1 year ago, 2 years ago, 3 years ago, but it continued to go up. So apparently nobody is willing to sell anything. So I wouldn't bet against it, but I don't want to bet with it. So yes, so if you are invested in the stock market and you believe that the stock market can continue, what is I think is going to happen is we are going to experience probably some correction. And if you have some money on the line that you want to invest, I mean, you need to wait for that before you buy anything. Yes, even though the trend may continue a little bit more, but yeah, for as I said earlier, for me the stock market is just too risky at the moment. I don't want to have anything to do with it. So anyway, look at gold. Yeah, so I think here, because as I said, there is long-term players that are positioning themselves, and I think we can see here that they are currently positioning themselves. So I'm start to be very confident that we are near a bottom, and so that's what I'm tracking. So I think part of them have actually positioned themselves here, and I think now they are currently trying to buy a little bit more currently right here. And so I think we can be confident because this is those big players. Those big players know way more about the financial market that I do and we do. And so if I see them buy, I can be very confident that the price may turn and the bull market may resume. But so I'm waiting for the price maybe to go back this week. I'm very interested to see how this week is going to play out in gold and silver also, to see how the price is going to drop. And maybe, so we are going to be in the last week of August. Then I will be looking for entering at the start of September for the next bull leg. Up and silver, yes, silver also, you see it's going down. I'm going to wait, maybe place an order just above those candles, waiting for the price to come back up. And if I see some trends, yeah, I will be very confident that at the end of next week we will see, but that the bull market may be the correction of the previous leg has reached a bottom, and that we may experience a new uptrend. Yes, so yeah, silver and so on. What else we can do? Yeah, and BTC, USD. So let's see the top 3 of crypto that I like. So I think, so we had this massive capitulation here, and this is a manipulation pattern to exhaust demand in supply. Yes. And yeah, yes, to exhaust supply. Sorry, to exhaust supply. So the sellers, and so the manipulators can buy as much money as they can. Because what you need to understand about the big player is they have tremendous amount of money, and if they just buy, the price will move up without them having a good price for it. And so what they need to do is they need a massive amount of selling from people in order to buy what they are selling without moving the price too much. And this is what happened here. The price moved down, and so this manipulation pattern, which at this point I had a lot of friends and so on tell me, oh, this is over, the crypto market is over, everything is doomed, I'm getting out and so on. I told them, no, you shouldn't. This is just, there is no more seller, no more buyers. Things have reached a bottom. Actually, you can, I did a video in the 22 of June where I told that I think that's going to be bottom, and so far I was right. But in the short term, so let's here we see Bitcoin has got a really massive run, and I think it's a little bit overstanding. Now we may experience some correction, probably on the area of 38 to 40 maybe. And I would think to add to my position, that will be interesting now that we have a clear thing that the downtrend is over and the uptrend start resume. So this is what I'm going to look for this week. See if Bitcoin have a massive correction. I think this correction is going to last probably until mid-September and so on. So we'll see. Yeah, I'm going to Ethereum. Same deal. We had a massive run. Now what we need to understand also is every altcoin is generally speaking following Bitcoin. So if Bitcoin goes up, everybody's goes up, and if Bitcoin goes down, everybody's goes down. At few exceptions, and this is the exception of Cardano. So for Ethereum, I think is going to follow what the Bitcoin does and probably have a dip in the September time frame. But if we look at ADA, ADA has this, I need to remove that, has this massive run. And so maybe it's going to experience a dip in September, but I don't think so until the 12th of September. Maybe after that is going to go along with what Bitcoin does, but until the 12th of September, I think, because the 12th of September is the hard fork of Cardano, where they're introducing smart contract, and so everybody is hyped about that. And I think so. The price is going to go up all the way until this time, and maybe after that, after the hype about smart contract and so on is over, Cardano is going to get back on track with what Bitcoin is doing. But probably this will be late in the correction of Bitcoin, so we'll see. Maybe Bitcoin will drag down a little bit Cardano so we'll see. But Cardano is a very massive trend. I'm just looking for, because it has really went up very strong. Maybe this week we're going to experience some correction, but I really won't bet against it because the hype around the smart contract is just so high that I'm really curious actually to what the next 3 weeks, because the smart contract is in 3 weeks. I'm really interested to see how things are going to go. Yeah, that's it. So yeah, that was the first actually just a minute. Yes, so that was the first Sunday review, a little bit long, way longer than what I wanted to do, but I hope I helped you to understand the stock, the financial market and so on. I didn't want to go too much into the technical this time. Maybe in the next few time I'm going to be progressively more and more technical, and also I will release videos that are more about the information, the educational part of investment and so on, like investment 101. And so yes, you will have to watch them if you are a beginner, but if you are more advanced, probably the next Sunday I will do some, I will be way more straight to the point. Because currently today is not straight to the point, I think. Anyway, so thanks you for watching, and I see you next time.